Hey, everybody. We are going to talk about one of the cheapest stocks on my radar. It's one that I own a lot of. Its General Motors ticker symbol is GM. We're going to dive right into it. I have automotive expert John Rosevear with me. I can't wait to hear what he has to say about it. But before we dive in, take a look at the link you see on your screen, fool.com/Frankel for the top 10 stocks to buy from the Motley Fool right now. They are a sponsor. They're the best way to support this work we are doing on YouTube. Again, fool.com/Frankel. So, John, it's really easy for me to say that GM looks cheap because it's trading for 5 times forward earnings, which it is. But I feel like that's been my part of my thesis with GM for 6 or 7 years now, is that they're trading for a low single-digit multiple of forward earnings. Um, so usually when I see a multiple like that, it tells me that the market is assuming that profits are going to go down. You see that in a lot of home builders right now, where is just an example of an industry I know really well, where profit margins are just insanely high because of the all-time high real estate prices right now. That home builders can, anybody can. It would be really difficult to not make money as a home builder right now. I can put it that way. So, is it a matter of their GM's profit margins are very high right now, and it's expected to go down? Are we expecting a recession to erase profits entirely or reduce sales? Is it because of all their EV investment? What is your take on why GM is such a cheap stock and persistently so?
We should point out, though, it is a cheap stock, but it's a lot less cheap than it was 9, 10 months ago or so. I think it's up something like 85% since November. Check that number, but it's on that.
Yeah,
It's
it's
on that
up to a
magnitude.
5 times earnings multiple.
Yes, but one of the dynamics here with GM that's kind of interesting is that rather than paying huge fat dividends, they've been buying back stock, and they've bought $2.5 billion worth of stock in 2022, $11 billion last year, already 1.4 billion, 1.5 billion in the first half of this year. They've got a huge fund approved. They've been buying more, and of course, as you have fewer shares of stock outstanding, earnings per share goes up, even if the business is flat. Right, so so that affects your
It's
multiple to
it's
some
it's been
extent.
18% of their shares over the past year. Their share count has
Yeah,
gone down by 18% in one
yes,
year. That's
yes,
pretty exceptional.
yeah. It's I mean, it's also they're positioning it accurately as a vote of confidence. It has certainly made the share price go up, and it's it has certainly helped that. But more broadly, there is an actual story that has helped the share price go up in the last several months, and that GM has talked and talked and talked for several years about their EV push. We're all in on EVs. We have the Ultium platform, the Ultium batteries, blah blah blah. And now and there were some problems rolling out the initial Ultium based the EVs. And things got postponed. There was a problem with a tooling supplier. Mary Barra talked about it at some length on a couple of earnings calls, but I think it might have slipped under the radar of the average person looking at this and be like, they promised to have EVs now and now they don't. What's going on there? And if you don't look deeply, it's easy to say, oh, GM screwed it up again, because GM carries the weight of decades of history where GM did screw it up again and again and again. And I've been saying for years, this is a different company now. It's recapitalized, it's refinanced, it's under Mary Barra, they're making good business decisions, but still that old reputation lingers. And I think, there is a certain Rodney Dangerfield argument. GM don't get no respect because of that long history from people who haven't looked closely. But, now we see the Ultium-based EVs are shipping and they're good, the Cadillac Lyriq is really nice. The Chevy, the original Chevy Equinox, the Equinox EV, the lower cost one, is getting good reviews. The Blazer looks good and so forth. I mean, there are many more coming, a bunch of Cadillacs coming out by the end of this year. And the Silverado's out. It hasn't gotten a ton of traction yet, but production may still be ramping up. The electric Sierra is coming, the GMC Sierra, the GMC pickup truck. There's many more models are coming. And now I think at least Wall Street is saying, oh yeah, GM is actually executing on this. But even so, even though the stock is up quite a bit, it is still from a PE perspective, it is still cheap. And I don't know honestly what to think of that. I mean, we can point to the buyback, we can point to concerns about the U.S. economy, which now maybe seem to have been overblown more than they were maybe 3 or 4 weeks ago, um, as the data comes in. But still, there are concerns. And I think it's also, if you want to own an American automaker, you look at Ford and there's a 5% dividend yield. GM's is much lower relative to its stock price. And you might say, well, if I'm just going to buy this thing and forget about it, I'm going to collect Ford's dividend. you know, and I
I'll
think that's part of it.
I'll take an 18% buyback pace over a 5% dividend as a long-term investor any day
Right,
of the
but
week.
you and I are a little more sophisticated about this stuff than somebody who's just, trying to plug a hole in their retirement fund. Um, I think there's a good case for GM. To the extent there's a case for any automaker right now, if you are worried about the economy, you can certainly do a whole lot worse than buying GM. I mean, they have been, with some bumps along the road, executing like a powerhouse for several years now. Quality is way, way up. Sales have been strong. Profitability per vehicle has been way up. They've optimized their portfolio. They have committed huge resources to this EV transition, and although it hasn't really started to be visible until recently, go drive them. Go drive an Equinox and see. These are good EVs, and they're internal combustion vehicles. They're big pickups and they're big SUVs. The Chevy, the Tahoe and Suburban, the Cadillac Escalade, and the GMC Yukon and Yukon Denali. Those are cash cows. Those are money printers. They're huge profit makers, and that's going to keep GM in the black and fund all that EV stuff, for as long as it takes to get traction on all of that.
Yeah, it feels like they should be trading for a lot more than they are right now.
Mm-hmm.
But like I said, I've been saying that since about 2017, consistently. There's always, auto sales are at a peak, they're going to fall off. Profit margins are going to fall, and then it hasn't really happened, with the exception of the COVID shutdowns and all that.
Right,
Uh,
but that was
yeah,
once in a
and
century thing.
management handled that well, I thought.
Mm-hmm. They did. They did.
So it's going to be interesting to see what the future holds. And of course, no one can predict what, if we're going to have a recession, if we're not. But this looks like a value, and as long as, I applaud the aggressive buyback. I love to see that, and maybe there'll be a great dividend stock again at some point. But for now, I think they're doing it right. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.